Good morning, all. My clock is showing 10:05, so let's get started. We might get still a bit more people joining in, but let's head forward. Thanks for joining us again for this session. Good to see you all again. Today's topic, preparing the process and materials for your round. So let's start with a brief recap of the previous webinars that we have been doing so we can get better alignment on what we're discussing today. So we started a couple of weeks back on the whole journey around startup fundraising and making the metaphor around sales process. So just reminding this that the startup fundraising is a sales process, and your goal is to get the investors to buy your search, buy your product. And where we started this whole process was taking a look at what the investors are actually buying. So what it needs to happen that you get the investment done. So what are the requirements for you to get a term sheet? And we started by discussing what makes startups fundable. So what are the different components you need to build around your startup that it's actually fundable? Because if you start to go into this fundraising process, there's no reason to spend a lot of time on it if you ultimately know that your startup is not in a fundable condition. So if you're wanting to know more about this topic, check our first webinar around what makes startups fundable. Then last week, we were discussing more around that it's not only around that your startup is fundable, but it needs to be great investment case compared to the other options investors have. So the investors can choose from a lot of startups where they spend their money, and not only to startups, but they can spend their money into other asset classes. So what you need to have is actually a great investment case on top of that your startup is fundable. And what this means is that you have a roadmap and a plan that what you're raising from the investment, you use the money wisely on the right things on the right time, and your valuation is balanced on the money that you're looking at. So ultimately, this means that when investors are buying shares, like you're doing any type of buying, they're looking at the price to quality ratio, and you need to have that really accurate for the investors to fit. So that was last week, and around what you need to prepare or specify for your investment case so that it's a good fit for investors. And now today, what we're going to focus on the next steps that you know that your startup is fundable and it's a great investment case. Then what you need to find out is the right investors for you to present your case. Then you naturally need to get them interested. And finally, you need to be able to close the round, so make the sale happen. And today we're going to focus on preparing the materials and the process. How do you make these points from 3 to 5 happen? And then next week, we're going to discuss around actually running the process. And what we mean by this is, well, today our topics are going to be around building your investor list first. So how do you actually prepare the list before you start reaching out to the investors? So you need to have a long investor list there. How do you qualify the investors? How do you research them? Then the other topics is going to be around the pitch deck and other materials to prepare, and also discussing a little bit about the data room, and finally having again 15 minutes of time for a Q&A at the end of this call. And meanwhile, feel free to ask any questions on the chat all the time. I'll try to take a look at it meanwhile while talking. And feel free also to raise your hand if you have a question. That makes me to actually react, and that makes that ping sound. So feel free to use that as well during the whole presentation. Good. And housekeeping again, the webinar is going to be recorded, and you will get the recording as well, the slides at the end of or after this session. Good. But let's head forward into the first topic of today. Let's start by building your investor list. And what we mean by the investor list, so let's start with the very basic. This is your lead list. So what you need in any sales process is to have a lead list, information about the contacts, investors that you are starting to prospect. And what we mean by this is that most likely, as it's going to be a sales process, you will not, if you just have one or two investors there, it will most likely not happen that you will actually close the round. And naturally, this is a place, it's not only the names of the investors, but the more information you can have about the investors, the better you can qualify them. And a fast question here before I go forward, actually, if you can tell on the chat that how many investors would you like to see in your investor list, or how many do you have at the moment? So when you're preparing the fundraising round, what's the number of investors you have in your long list? Anyone at the moment in the process, and please use the chat if you have been building this, and what's the number that you have currently in your investor list? Wait for a minute more if anybody is currently building an investor list. Lillian 8 at the moment, and guess it should be 50 plus. Good one. Sergey 2. Hopefully you close, but you need to have a good closing rate. Now that Thomas is having 120, so then you don't need to close anymore. Everybody of them. Any others? Well, as we see, it's basically a big variance of this, and I would suggest that aim at least having 100 names on the long list. Why? Simply, it's easy to start the process with a couple of names or good contacts for yourself, but the challenge comes that if they say no, then you need to start over and start to think about, okay, how do you start from over this whole process? And also just researching first a long list of investors that will open up your eyes more around what the market looks like, what's actually the investors that you really need to be closing, and what's kind of your likelihood of making eventually the sale happen. So it gives you, the longer the list, the more you can actually have misshots in the case. But at the same time, the longer the list, the better you can qualify it. And that's naturally the second thing is always be qualifying your list. So it's not only about going through that you have a long list of investors, but try to qualify the lists like you're doing with any leads or prospects, target customers that you're prospecting. You need to qualify that should you be spending time with this investor. And what I mean by this, I actually took from my LinkedIn yesterday a message, an example what I got from yesterday. And I get this quite often as well. And I'm not the investor who has the most inbound coming in. So I'm just guesstimating how much other investors are having spam in their LinkedIn or emails. But I got this yesterday evening in LinkedIn. So a bloke, I guess this is coming from Sweden, but the gentleman sent me a message around LinkedIn about the thing that I noticed there is actually he's building some type of chains and he's open for funding. So he sent me first a connection request, and maybe a couple of minutes after that I got this message. The thing going wrong here, well, first of all, I got a connection request first, and then I knew already that it's open for funding, so I could already know what happens after that. So I'd rather want to cut that in the first or in the connection request already. But the second thing is here, I don't speak Swedish at all. So maybe this is the first thing that the person could have been researching is actually my language. I have nothing in the internet that relates to Swedish. I'm based in Finland. Well, my wife speaks quite well Swedish. I don't. I have a kind of Swedish surname, but getting a Swedish message as a Finnish person, English could have been fine for me, but I think this is the thing that will pour completely off, and will basically, this might be a good case, but would I suggest this to anyone? The kind of feeling that this person is doing it from the first get-go is simply that he's spamming everybody, not researching any bit of me. The second thing, well, I didn't read this at first, and I started to read this today morning because I think this worked really well as an example. But so you're true that Swedes believe that all things speaks as Swedish. I can actually understand it, but let's be honest, the point is here that if somebody approaches me with a different language, do I spend time on this? Not really. So it's really kind of postponing. It just goes to the spam folder in my case. And the more I'm starting to actually read now, this is, okay, they make clothing for motorcyclists. Okay, I'm not investing into clothing. I'm not investing into B2C stores. So there's nothing really that he researched that does this fit to me. So overall, what I can tell, he's spamming around all the investors out there. So it might work that if he has a tens of thousands, or he goes through whole LinkedIn and just spams everybody who has an investor name there and sends it out, then it might work. But the conversion with this type of messaging, maybe he converts 0.01% out of it. So the likelihood of him actually closing the round, well, and especially I don't know what's the kind of Swedish amount of investors in LinkedIn, but I doubt, let's put it this way. So this is just an example of what goes to the spam folder instantly. So know the investors. And Lillian is asking, better to reach out Finnish angel VC in Finnish than in English. English is fine. So I would say this way that if I come from a small language like Swedish or Finnish, English is fine for us. And of course, if you're really wanting to make the connection to Finnish is better in that case. But I think the biggest mistake that you can do is actually sending wrong language. So, and then again, if you speak English or you're going to an English market, it might be a qualification for you that you want your angels to speak English. Another thing that I'm suggesting on the English side is that, okay, maybe the first contact can be in Finnish to a Finnish people, but if you're mixing the round with English speaking and Finnish speaking, and all your round documentation is in English, then keeping all the communication, or your team is half English, then keeping the company language in English is reasonable. So there's, I would say, most of the VCs, and I'm not sure is there any VC who would do in Finland documentation or legal papers in Finnish. So most of the legals will be done in English in any case. So, but yeah, that's just an example of why did you do the research and what to check here. So the research, it's for you and it's for the investors as well. So you can be spamming everything to everyone, but if you build out this list of 100, can you already say from the list of 100 or list of 500, list of 1,000 that they're not going to be a fit to you, so you shouldn't be spending time on them. So there are basically things that you should be checking in the list. So for example, what stage is there investing? So are they doing pre-seed, seed? If you're in an idea stage and you have nothing built, look for the investors who are doing that. So there's a lot of investors like myself. I don't invest when there is no revenue yet in the companies, because that qualifies for me that the company at least has been doing a prototype and they have been doing a little bit of a sales there. So that helps me to just filter out the cases that I can take a look. And naturally the same way for you, that narrows down the focus group, so you can focus your outreach better. And other things, so I think the stage is naturally the thing. The other thing, which is very big filter, that they invest in your country. So angels can vary a little bit from the country, but then VCs, they have a strict mandate that if they're allowed on their investment tests to invest only in Finland, and you're based in Sweden or based in Germany, well, there's nothing that they can do. So don't waste your time on people who are not investing in your country. And naturally, other things, the industry. So if somebody is doing health tech or pharma, or I'm not doing health tech or pharma, don't waste your time on trying to convince me into investing the best pharma case ever. I'm just simply not going to do that. So focus on the ones that you're likely closing and not trying to convince people who are kind of far away. So don't try to convince people to do other stuff that they don't want to do. And then naturally, the ticket size is how big tickets you're looking. So if you're looking overall, let's say 50K to 100K very early, don't go to investors who do minimum 500K tickets. And the vice versa, if you're looking for 2 million and pulling it from angels who are doing 10K tickets, it's a tough job. So try to align these things. So this is kind of the basic filters of going from the long list into a short list and qualifying that this is the potential investors that you should be taking a look. And briefly, I'll show you actually how you can do it in our platform, this whole part. But if you think about the different sources for this, so you have paid sources like PitchBook being the crown jewel, costing 10K per, well, I think the minimum is actually 18K at the moment that you can get access to PitchBook at the moment, but the data is really good quality, but really expensive. Then you have Crunchbases, which are kind of $500 per annum deal room, 3-4K, and naturally our platform as well. So paid sources, and the data quality really varies on this. So I would suggest if you have the money, go to PitchBook or then our platform. Why we originally started our platform and where the name comes, it's actually on the data quality. So one of the challenges you will have with Crunchbases and deal rooms and on these platforms that scrape information is that can you trust it? And if you start to spend time on going to investors' websites, Crunchbases, deal rooms, and they have conflicting information, it's really hard for you actually to know that are they investing into that industry or that industry if you have conflicting information. So if you find conflicting information from these places, the best way is always you can ask from the investors. But naturally, what you should be focusing is the ones that you know that are going to be fit to you, to your investment case. So these are paid sources, and then you have a lot of free sources like accelerators. LinkedIn is full of investor lists, but I think most of those investor lists that you've seen in LinkedIn, they are very crappy in terms of quality. So if you have investor lists that are having 50-60% good data, that means that every other line is bad, and you have very hard to actually validate those lists. And naturally, what you can trust well is other founders. So asking from other founders, do they have a list of investors that they could work at? And other sources, of course, going to events, going to investor communities, associations, they have their own investor members that you can start building the list. And I will now take the bit of time to just show how you can use our platform for building your investment list. Give me a second. I need to share my other screen or other tab. So what you can do in our platform and what we're aiming at, this is a demo account actually made from one of my portfolio companies. But when you create your profile in the platform, what we start to do is basically the profile is built so that the investors are naturally wanting to see these details. So what's your MRR, what's your traction numbers? We estimate from there your stage and how much you're seeking capital, what's the industries. And what we can then do is that we go through you the best fitting investors. So we go the investors already through, so you don't need to spend time on qualifying, going through the details. And we give you simply a fit score, how well your investment case fits to the investors' thesis. And this is an example. So out of here, what we do then is simply building you a Kanban and a funnel where you can actually manage your fundraising, so you can see basically how you're progressing with discussions with each of the investors. And on each of the investors, we still naturally have the details of what they're investing, what's their ticket sizes, what's the industries, are they generalists, what do they invest in software, hardware, what type of customer groups, and naturally the contact information, so you can go to see the investors website, LinkedIn profiles to get more feedback on this. And this way you can actually start building your list. And the nice thing about this whole platform, why we start to do this, is that as this is one of my portfolio companies, let me show you how. So this is from a startup side, but the same company, how it's seen or it's visible from my side. Let me stop presenting and I'll go back to my own presentation. Yeah. So what I, as an investor or accelerator, when you start to have collaborators, shareholders, let me log in into my own. What this whole system is about is that you can actually start to collaborate with your advisors, with the other shareholders. So like now this company, they have been adding me and the other shareholders, other angels, accelerator people into their cap table. What that means is that I can now go to the same board myself from my profile, and I can go to all of my portfolio companies and start to comment, for example, here that, okay, I think some investors are, I can do the intro for this, or other shareholders can do the intros for these investors. So what this becomes is a natural place where you can collaborate with the other shareholders, or if you're participating in an accelerator, the whole point of this is that for the accelerator people, it's very easy to comment on their different portfolio companies, and thus you get the whole benefit of your advisors and shareholders in the whole fundraising round. But that's basically what you can do around our platform for keeping your or building your list, and also building or keeping the whole process organized. But let's go back into the presentation. So these are sources for it, and naturally you can use our platform for it, but other sources, or you might know better yourself, you have your own network, so feel or use all the ways that you can source investors. So the longer the list, the better. And yeah, that was it. Then when you have your list, if you start to think about how to qualify or how to organize it, also prioritize not only that they invest into your type of company, but prioritize it as well on what's your access. So for example, if you're that Swedish company looking for Swedish investor, they have hard time to convince me into there if there's no relation. So first of all, prioritize the kind of contacts that you is in your direct network. You can just send a WhatsApp with them. Can you discuss with me? So the way that you can get into them, the easy sales. Secondly, the warm intro. So if you have a shareholder already, advisors, fellow founders who can do the warm intros, everybody that you can get a warm intro, it's just it increases your likelihood of your email getting noticed. Then third option is their email. Always, if you find the email of the selected person, always prefer that option compared to LinkedIn, because the LinkedIn starts to be so much so full of spam that it's hard to actually filter out the relevant stuff there. So we see more and more basically VCs and investors not replying into LinkedIn because of just the sheer volume of spam there. But try to go first into directly to people if you can go or get that in front of a person, and if you cannot, then go to a website form or And the final thing is kind of going to this info@fund.com, which are very often kind of full of spam. So there's kind of long way from info.fund.com to go actually into a person's table that somebody is starting to evaluate you. But this is kind of the third step that you do. So when you start to build your list, first go through the try to get a long list, then qualify that they actually invest into your network, and then prioritize what's your access to those. So those are the 3 steps to do on your investment or building your process of leads that you can start to contact. Good. That's about building the list itself. Any questions at this point, or shall we jump into materials to be prepared in advance? So I'm not seeing any questions for now. So let's jump forward into materials. And why this is important to prepare stuff in advance. So when you start to reach out to investors, naturally, if you send them an email and they get interested, you get the questions back. So if you reply, or you should be preparing certain amount of documentation in advance so that you can reply very fast to the investors' questions. So before starting to send the content or information or take contact with them, make sure that you can anticipate the question that is going to come instantly if they want to have a meeting with you, and you go further in the discussions so that you don't need to wing all the documentation during the go. So must-haves that you need to prepare in advance. Naturally, the pitch deck, I'm sure everybody knows this. We'll discuss a little bit around that. But another thing that I think very often startups fail is that thinking the pitch deck is that it's a summary of things. And it's not really a slide deck of something, but or what I see that startups very often start with the pitch deck, but they don't have anything under the hood. What that practically means is that when we start to discuss further, we start to notice, okay, they just winged out the slides, and there was no kind of proper work behind the pitch deck. So at least have a roadmap clearly of what are you doing with the money, and a financial model of if you're spending $500,000, how you're spending it, and how that's going to turn into revenues at some point. So those are the minimum things that you need to have. And third point, make sure that you collect all your basic contracts, auditor statements, if you have employment contracts, these type of things, basic legal stuff into a data room. It's just making sure that the investors will ask this, and keeping them in one place. It will take a couple of hours from you and building that data room, and it will be so much easier when you have it prepared before you start to reach out, because you will eventually go to that point. And then also there's good to have some backups, nice to haves. One of the things that these are not must haves, but if you have any documentation on market analysis, reference customer interviews, product marketing data, team bios, details of competitors, it's good to have this as backup. Because one of the things that I think turns investors very easily down is that you have a pitch deck, but then you have nothing else. So even though if you have them in your mind or you have been planning them, but if nothing is documented, the conversations goes very often into, can you share me something? And it's not that it's actually needed, but if you don't have anything, it feels bad to actually reply to the investor. We have nothing, we don't have that. Or then you're just winging them on the go. So it's good to have just stuff that you can hand out more to the investors during the discussions, or that at least you have been drafting this so you can tailor them if the investors are asking them. So the more documentation, the better you're kind of suited in the negotiation. But naturally, these are something that you don't share in the start of the discussion, only when the discussions progress. So the good to have backup materials. But now let's go more into the details of the main document. So what I want to talk today is the pitch deck, as well the roadmap and a financial template. So pitch deck, well, couple of things. There's a lot of content in the internet of how to build the pitch deck. So I'm not going to go into details, but I'm going to give a couple of examples here. So first of all, it's a summary of your business. And what we mean by the summary is that you cannot really summarize if you don't have the content. So make sure that you're actually summarizing something, you're not winging it. So you're not starting with the pitch deck, but it's more that you have been doing the work that you're summarizing. And the typical way the slides is kind of, you have the first slide is something vision, company purpose, a blurb. Before you go to the problem, you have just first slide of explaining briefly in one line what your company is about, purpose or vision slide. Then you start with the problem solution, start to explain why now it's a good time to for the problem solution, tell about the market size, the competitors in the market, more details about your product, what's your business model, how you're going to make money, and naturally the team, and finally the financials. And there's, I think these are in 90% of the models you will see in the internet. These are the slides, a little bit thinking the order can change, and it's not that important, but that what's the actual detailed order. But try to use roughly this route. So it's easy for the investors to browse, because they get 95% of the decks are built this way. Then it's very easy for the investors to skim them through, and they expect these things. So make sure you have these slides and roughly in this order. And why this way? So if you think the deck's purpose, it's a summary of the business, and it's for the investors to evaluate your case in a short period of time. So what the investors want is a summary that they know should they continue discussing with you or not. And this way they need to be getting interested in your case based on the deck. Or if they see that the market is something that they don't want to enter, they don't believe in your solution, they don't believe in the team, or the financials doesn't make sense, they can easily say that, okay, this has too many red flags, we don't want to spend time more on this. So its main purpose is to give the investors a understanding that they can think about, do they want to spend more time with you? And what this means is that it's the first gate. Do they want to spend more time with you? And if they want to go more time with you, then you need to provide them more content. So that's why I tell it, it's the summary of your business. And then you go into the details, and from here the actual work starts. So you need to explain why go more detailed into the problem, into the market. How are you going to build the product to fix this or do the solution and so forth. So the whole part of the pitch deck is just starting the conversation. So this is a lot, as it's the starting of the conversation. And as you see, first, what the investors are also trying to look from this deck is that they want to see something exceptional. So why this is going to be so great? They need to get really excited by your case. And that means that your deck and your pitch will have a massive impact on the outcome with the investors. So if it's kind of blunt, if they don't get excited about that, it's hard for continuing with the investors. Taking a small look at Lillian's questions. Is it worth to create two pitch deck, one for sending and one for actual presenting? Definitely yes. So there is multiple, so you can optimize this for quite a lot, but one for presenting, it really depends on where you're presenting nowadays. So you almost always need to send your deck in advance, and it's a reading deck. So if you don't have, or if that goes in front of people before you can present it, naturally it needs to be readable. So it's not a presentation deck, but it's a reading deck. And I would first focus on the reading deck, because that's most likely where you're going to use it. And the reading deck, the other important thing around that is that if you get we see analysts or someone's interest, that person needs to forward your deck into other people. And does that means that do you expect them to explain the deck again, or can you do part of their work that it's easily explainable for others just by sharing the deck? So the more easier you make the investors work, the more likely they are going to want to work with you. And if your pitch is unclear, it's very unlikely that they want to work with you because it's unclear pitch. So make sure that your pitch is focused on understanding what the investor wants to do with the pitch. Don't focus on yourself or your company, but what the other side is needing to have and what they're trying to do with it. And let me take here a couple of examples. So I'm not going to go into details, but on those slides, but I'll just give you a couple of examples that I'm using in pitch deck trainings. And this is actually coming from my own company in my past. So this used to be my first company slides, a little bit updated, but this is what we did. So yeah, I'm not an engineer, but it might look like that. Anyway, we did different type of sensors and optics that we were able to measure liquids in factories. And what we had there was a optical sensors, conductivity meters, which told us by the liquids that was going in the factory. So we're working in dairies and breweries and in food and beverage industries. And then we were collecting a lot of data out of there. And eventually what we were able to do with all of this information, we were able to give for the factories ways that they can use the data to optimize their processes. And this used to be one of my pitches to my clients. And maybe now, well, then I could go into more and more details of the solution, how the actual sensors work, what was the technical details around this. I could talk quite long about this. But now a question to you with this example, if I would start this way, are you interested actually to hear more? And there's now a poll. I'm trying this first time in my life. Let's see. So answer this question in the poll on the right side of the screen. You should see polls and there's a live. So are you interested, if I explain it from the technical side, are you interested to listen more? No, 6 no's, 8 no's, 11 no's. Thank you. I think it's clear. Can you see? Okay, now I presume you can see the results as well. So 14 no's, nobody's interested to hear more. Clear. I'll play a couple of tricks. Yeah, nobody's interested to hear more. What if I told you that we did in our second year, so the second year we did 1 million sales, and out of that we did 42% EBIT. So we made a little bit over 400K profit, meaning that we didn't actually need cash. And if I would tell this, would that make you interested? So would that change your mind? Now I will launch a second poll, just explaining that we make 1 million money and 42K or 40% EBIT out of it as a startup. Okie-doke. So it changed your mind. Exactly. So point here, what you can save your pitch if you have numbers. So yes, investors were interested because we made damn lot of money, and they spend it more time than the 30 seconds because they skimmed through, they didn't understand anything about that. Then when they went to this financials deck, they were, oh fuck, what these guys are doing, they're doing something, so let's spend more time on it. So naturally that's kind of a thing that you can save. But if you don't have those numbers, then there's nothing that you can be saved on the case. So let me retry it. Well, that was actually that was just an example. We never actually did that bad of presentation. I needed to make that bad presentation, but let's try to do other way the same thing. So instead of starting with the technicals, let me start the same pitch and same product completely another way around. And This is a question you can answer it now in the chat. So when you're doing dishwashing at home and hand cleaning dishes, how long it would take you to hand clean this plate? So tell us in 5 seconds, Sakari. 5 seconds. Any else? How fast can you get this plate clean? Nobody else is doing any more hand dishes. I have been hearing anything. So used to sell this 10 seconds. Okay, Heidi is doing that. Somebody has lied to me that it would take 2 minutes. Is it tried? Yeah, it might take 30 seconds, 15 seconds exactly. But somebody lied to me someday that it could take 2 minutes, and nobody in the world is doing 2 minutes for this, for sure. Anyway, the point being, but think about how long your dishwasher is actually doing this. It might be washing this for 40 minutes, 1 hour, 2 hours. Does it really take 2 hours for getting a plate clean? And that's what the dishwashers are doing. But then if you start to compare, if you think about what the dishwasher is not having versus when you manually clean this or hand clean this, is that the dishwasher doesn't know when the plates come clean. And what we did was a sensor that was measuring how much soil there's in the surfaces of these plates. And basically, if you're doing dishwashers, you see nowadays that there's basically these sensors telling that can you do 40 minutes, 30-minute programs and so forth. So we did that sensors, but instead of doing that for household appliances, we did that for big breweries and dairies, and they need to clean their processes. So when the milk or beer goes in the factories, you need to clean them the same way, and the actual process, the cleaning machines are quite the same. And when we put the machines there, we were saving €500,000 per annum for the customers in time, water, energy in the cleaning. And we took maybe, we did 200K projects, which were very profitable for them. So almost the same thing without any technical explanation. Now asking the same question again. Let me go back to the polls and asking this, launching another poll. So again, a question. Did this change, this way of presenting the same thing, did it now pass the problem solution gate? Was it more understandable for you? 2 yeses, 1 no. Okay, so 1 person is still not doing cleaning, but that's understandable. I didn't like it either. Anyway, 6 yes, 1 no. Out of, we started with 15 no's. And this is just a simple thing that you need to make sure of investors making sure that the investors are wanting to know your solution, because nobody's interested about the technical details if they don't know why these technical details matter. It starts to matter when they start to ask, are you accurate enough? Can you do that if there are risks? But don't start with the technical details, because they just try to go to the next things. Okay, that was an example of the storyline. I'm just noticing that the time is running up, so I'll bit skim through things. So one of the important things of your pitch deck is create a storyline, and 2 basic ways to do it is either the problem solution pair or traction story, and third one is a dream theme if you're serial founders who know the industry, or then there's some others, but I would choose always the problem solution. If you don't have a traction story or dream theme story, I would always choose the problem solution, make it really clear for the investors, and that's the one that, or what you're doing. Okay, but I will now a little bit skim forward, because I had one more topic that I wanted to discuss. So just saying out loud, if you take a look at this, our first webinar, the fundability model versus how the pitch deck are built, well, surprise, surprise, they're naturally linked. So the investors tries to understand or from the pitch deck, is your startup fundable? So they're very closely aligned in that sense. But that's a note. Then let's go briefly. I will go to the financial model from the deck. There's a couple of things I want to share about this. So I'm actually showing it from a Excel. Okay, it's serious. So what you should also have here in evaluation. So if you nail the deck, the next thing, there's a lot of details in the internet around what you have in your financial projections. And the first thing is that the financial projection, it's most likely not going to go right. You're not going to nail your estimations. But the thing that the investors are wanting to take a look at with your financial projections is that, are you sane? So are you actually able to use the money rationally that you're planning? So what you have in your financial projections is, well, first of all, most likely you start with the cost side. So for example, the salaries, sorry, this should be sales, not sorry. So you start with the sales side, and you have here basically breakdown of different months and what are you expecting to turn in terms of pilots. If you have a product, how much you're getting from consulting, and it tells you to the investors that, okay, how do you end up into your numbers? And this helps the investor to start asking questions. So if you say, for example, that you have an idea, and next month we're going to start our product is going to start delivering us 100K per month, the investors will instantly know that most likely it will take you 6 months even to build it. You need to recruit a lot of people. So most likely you're not sane. So this way, what they're evaluating is that is this way that you're using the money, are you actually thinking this rationally, and do you know what you're doing? And then they're going to balance it, taking a look at the cost side. So if you're going to hire yourself, maybe a CMO, CTO, and are you actually with the team that you're hiring, can you most likely do the things that you're expecting? So it's just taking a look at how well you're planning in detail level, and it facilitates the discussion. And if you wing it, or here is easy to kind of go wrong in that sense that if you don't know what you're doing, the investors will not have the energy to start teaching you how to build a product or how to start doing sales. If you've never done sales, the investors will not take the time on actually helping you to do the sales. And Lillian is asking already how much investors wants to see early break-even point rather than meaningful usage. Break-even point, of course, this needs to make sense. But the first thing is that they take a look at, is the assumptions rational? And then how much money are you needing in the bottom line? So how much of finance you need? And what they're actually looking at first is this, what we did. So I'm just taking our assumptions, and what we did here is a baseline cases that you can start to discuss with the investors and break down the hypothesis and the leap of faith smaller. What I mean by this is that, for example, when you have your line, so it's easy to say that, okay, in pilot sales, we have this product, we're most likely going to charge 3K out of it, and it will take us from start to beginning in 3 months. Okay, it might be 2K, but that's something that the investors can understand. So you break down, if you're going to make 200K on your first year, this is how you're going to make it. So you're going to make 3K or 2K. It's something smaller that the investors can evaluate. Then you're going to make recurring ARR 10K, but it takes 12 months to sell, and so forth. So you can actually simulate these assumptions and then take it back to this financial model. What's the main assumptions? And for example, our case, well, typically, and for all cases, it's around the conversions. And what we actually, I'm just showing here a brief point. what we did, basically assumptions for our case, we were looking that the pessimistic model, if with the pilot price would be 1K versus 5K, our cash flow would not change much during 5 years period of time. But if we are the demo conversion, so if we go from demo conversion 25%, so meaning from demo to next step, from 90%, which we used to have, to 25%, that would go from minus 300K up to 1 million. And this way we were kind of seeing what is the weakest links in our business case and what should we be kind of following detailedly. And when we were able to say that this is the demo conversion is the highest impact to our business case and the very unlikely that we don't have good numbers for it, we know that this is the one that we need to measure really accurately and make sure that we succeed on that one, while the upsell conversion or unit prices didn't have that big impact. Thus, we don't need to care that much of those things. And point of this was that when we showed this to investors, they believed that we managed the money. So it was much more around, do we know how we built this thing versus do they need to doubt us? And it's mainly about facilitating that discussion. Okay, so that's financial template, but now as time is running up, I know people are having questions. I will skip the data room and Sarah basically, I have time after the call, so I will now take a Q&A if people need to leave at 11 o'clock. But we can continue with the ones who have time on the data room 15 minutes more. But let's take Q&A for now, just for the time being. Anything coming so far? So let's see, I think I answered Lillian's question. Any other questions so far coming? Maybe then if nothing yet. Okay, I'll continue then what I had in mind, and feel free to continue asking it. And then except don't ask for the dishwashing. I'm fed up with that topic. Used to do that too much. Maybe if people need to leave or in 11 o'clock, I will say a couple of things. So next week, so I will still continue after 11 o'clock. But next week, we are going to talk more about running to raise. So when you have your materials ready, how do you actually then start contacting the investors, how to answer questions during the call, and how the actual process goes. And the week after, then talk more about after the raise. And if you need help preparing the round and preparing the materials, reminding you that we have the list of Europe's accelerator programs coming up. So a lot of good accelerators who can help you around this, also get investments from them. Another thing, we started last week to help and consult with startups and notice that our internal process works well. So if you need help preparing the round, we have bandwidth for more assignments. And we do also have a large partner network that well, starting to build, and it works well. So if you look for IPR, legal services regarding your round, or financials, need help on grants, anything like that, feel free to reach out directly to me and we'll guide you the right place. So that I wanted to say out loud. And also, if you like the content, well, naturally share your thoughts in LinkedIn, and all feedback is appreciated. Okay, I think that was the main things we succeeded on the timeline if people need to leave. But those who can still stay with us, let's go to the data room part that I didn't have time to go through. And I will then maybe taking Nico's question here still, as I'm assuming the company does the homework with the materials and calculations, what kind of time frame talking about with the investor? Well, Good question. In my previous company, when we had 1 million sales and 42% EBIT, we did the work. We got in 2 weeks the cash that we needed, but we did the work, and that's not the case most likely. So then when you are fundable, you know what you're doing, everything runs well, but most likely that's not the case. So that's easy, and investors will jump on that, but it's mostly about, are you there? Can you convince them? If you don't have, so first of all, you most likely don't have the numbers, especially if you're early. So then it will never be 1 or 2 weeks. So I said, I would say always prepare for at least 6 months of runway. And this is a learning process. So we have been doing this for hundreds of times now, seeing startups doing it for our own startups. And we know it already in advance that how well or how long it will take. But when you're doing it first time, second time, prepare for at least at 6 months. You get better and better on it, but at least at 6 months from start to finish. Then if everything is condition and you start to contact investors, still prepare and expect that you would be in condition, so no surprises, and you would be fundable. Expect still the contact money in the account 3 months. So it will just take discussions, legal checks, getting everybody signing all the papers. It's still worth at least 3 months from the first contact to actually getting the money on the bank. Okay, so we still have people in here, so that's good sign. Our people haven't been just leaving it. A few things around the data room. What is the data room? So naturally, all this pitch deck, company documentation there, but the data room, there's a lot of kind of mystique around that. But it's simply a place for the investor to check that you're legitimately organized. What that means is that don't take stress around it, that you will have a lot of boring stuff there that lawyers like, I don't, but there's basically include at least all the company founding documentation, so that it's just a thing that you investors need to check that you're legitimately, your company is legit. And then naturally financial statements, auditor letters, so that things are done, that the investors can know that they can actually invest into your company. Put also employee contracts, customer contracts, any other contracts that are material, so meaning that they have a meaningful impact. No need to put their kind of cell phone contracts that if you're buying an internet or that type of stuff, or if you buy HubSpot or Miro, these type of small things, they don't have any big risk in that sense, but meaningful contracts. So if you have something that the investors should know, so especially, well, customer contracts is a good example, that if they are big, if you're making 500K, 100K, or 100K, 500K contracts, they have a significant impact the investors are going to go through. If you sell a 10 euro product, self-service product, then the investors are just wanting to take a look at your typical terms and contracts, terms and conditions. And the point of this is not to have them perfect, but to have them so that the investors can take a look at the employee contracts, that you, first of all, you have them. And secondly, most often the investors wants to see something else there, their stock options, they want to change something, but you can always, you have a starting point and it needs to be legit enough. And then you can start to discuss about changing them. But the problem will be if you have nothing in place, so it looks sloppy and it looks that you're not organized. And then it's kind of, well, do I want to continue with the founders who don't get basic organization done? And well, IPR naturally, if you have IPR, relevant IPR there. And Tuomas is asking, are you talking about contract examples trust or real contracts? In most cases, these are confidential though. Naturally, they are confidential, but naturally most of this stuff is confidential. So don't share the data room before that. And then if you have a contract which has a confidentiality, I still, if I'm giving you my money, I'm still wanting to see all of your confidential documentation, because if you say it's confidential and there is, let's say you have a million contract with a client, that's really important for me to understand what is there. So you can basically take the client name away or something, but you will not get the investors to believe, okay, you have a 1 million contract, this is going to make it or break it, and just trust us. So you need to be able to share it to the investors. Of course, then there is basically the level of information. When do you want to share it and what type of details? So for example, that investors will want to believe you, but if there's a surprise, so for example, if you have a big contract that you don't want to uh, publish for the investors too early, you can outline the details and say that, hey, these are the details, ask us questions for this, but we will give you the contract only when you have been signing the papers, and then what is called basically, well, in the due diligence period, and there's a warranties period that, hey, if we give you information in high level which are not correct, then the investors can pull off it when they see the actual contract, and if it's not what they expected, they can pull off. So it's just a balance of when do you reveal versus how do you describe it. And if you describe it kind of, and it is as it is, then no harm done. But it's just a game of when to show, and the investors just want to know that you're not sugarcoating contracts or there's no liabilities that they should be knowing. So as an investor, what you basically hate the most is those, well, what we call the oh fuck moments, that you go on the first board meetings and then you realize that, okay, the things that we were told, that's not true, or if we forgot to ask something and we were kind of skewed up, and that's what we hate the most. So try to avoid of giving surprises to the investors. Written NDAs are not typical in use with investor discussions. At a point it is. So at first, yes. So data room, no, don't share it in the start. So you don't need to share data room anywhere early. And the NDAs, you can have two levels of data room. If investors wants to see your data room before an NDA, you can make two data rooms, one with company founding documents, anything that is non-crucial, non-important, and then another data room that this is you're going to just give to them after an NDA. And the investors will give an NDA when it's meaningful enough, but not in the early days. And these type of things you don't need to reveal in the early days. But the important thing is that you have them in place and you know how to build it in the process. So points here, prepare it in advance. And if you don't have it, don't worry if you don't have one document. So if one employee contract or something is not in the data room, it will be 10 minutes for you to put it there. But if you have a lot of documents missing, and it will look suspicious or sloppy, so try to make just the best impression of your ways of working. Okay, that was the data room parts. Any other questions related to this one? So I think we can go back to Q&A. Stephen is asking, can I link docs or how it is? Sorry, I'm not. So the document format doesn't matter. So how you share it, is it a PDF or do you use Google Drive? Do you buy a data room? You can, the ways that you share it, it's up to you. Typical ways, a Google Drive with folders named. The important thing is it's easy for the investors to find. So just make a Google Drive with, we can share a template of typical data room folders, and then just add the documents in a Google Drive and share the folder. So that's one way. Then there's a lot of paid services where you can start to see that who's visiting, how many times they're visiting. But in an early stage, I would not spend time on those. Of course, you can if you want to. Okay. Thank you for the claps. Any other questions raising up? Am I missing something? If nothing else, well, reminding, feel free to reach out, come to this next webinar. Also remember to sign up for that if you haven't already. Most likely you have. And yeah, reach out to us. We have capacity at the moment, so if you need help on these topics, feel free to reach out to us. And yeah, finally, all feedback. So feedback for us directly, what you would want to see more, how to improve the webinars. We're there for you. So want to understand this part better. And of course, if you like it, share your thoughts on LinkedIn.